Hey everybody, Mike Fairborn sitting in for Mr. Ben Watson, who is out today. Welcome everybody to Futures. Looking forward to our discussion today. We'll be talking a little bit about what Ben goes through each week as he takes a look at short-term, bull flags or bear flag setups. I'm actually going to also overlay today some additional ways to look at that resistance and support levels with pivot points. So we'll introduce those. We'll look at a huge basket of futures contracts today as we go through this. But welcome all of you today. It's good to be here with you. I'm joining the chat. Good friend and colleague of mine, Connie Hill. So it's great to be with you all, folks. Let's go ahead and take a look at our disclosures to get the show on the road here. Futures and futures options trading do involve substantial risks. They're not suitable for all investors. Now, futures accounts are not protected by the Securities Investors Protection Act. That's the SIPC. There's additional information listed here on futures and futures options trading listed on this screen as well. So a few additional items to address here. Wanted to also state that virtual currency derivatives trading involves unique and significant risks. Please read NFA investor advisory listed there for that. Additional points stated here. The information here is for general information purposes only. Now, the Paper Money software application is for educational purposes only as well. Schwab does not recommend the use of technical analysis as a sole means of investment research. Final slide. Investing does involve risk, including for some products more than your initial investment. Some additional quick notes in case we do go on the short side today. Wanted to state that when selling short to establish a position, the upside risk to close that position can be unlimited, as there is no upside cap to how high the price of an index can rise. Additionally, any futures contract can rise. The stop loss orders on futures are not guaranteed in execution due to exchange rules based on certain conditions at the time of activation. The exchange may reject or substitute an exchange designated limit order for the originally triggered market order. Okay, so having said that, let's go ahead and pull up our futures market right now to take a look and see what we've got. I'm going to set up here, get a couple more of these lined up in place. We'll look at volume profile here just briefly in a moment, but I wanted to state where we're at, generally speaking, on the market. Let's take that off for just a second. First thing we want to always do, folks, anytime we're looking at the markets, trend plays a key role, the direction of the trend. Now, big picture in terms of the daily chart, we're getting this across the board on daily charts. That is simply, we did make a lower low. We made a lower high. We didn't make another lower low. We're sitting at a lower high right here, which could be tied into some form of resistance that we're seeing right around 5,500. Notice this on this 5,500, just a key point to keep in mind, even on a short-term basis within futures. You got 5,500 right here. That is a prior low. Well, also with that, we have spent a little bit of time, haven't we, more recently, just sitting at that level. That happens to be a level that we decided to basically stop at too. Okay, and we've got in a little bit of a sideways range. Let's do a quick review of our other markets as we go through this as well. So we can kind of take a look just on a referencing each of these here as we look at this. But here is a perspective here that we've got on the NQ, the NASDAQ, very similar. We did actually make it up through that resistance level, but nonetheless, a similar type pattern occurring up here. Notice the sharp upward move and then just a contraction of the price range. As I contract that price range and kind of show you what we're actually seeing here, and you'll notice this across the board, it's a little bit of a tightening, almost a triangle pattern here. We could be on the verge of breaking up to test that level again, maybe some potential highs, or pulling back a little bit. It does look interesting. I will say this, that on both the ES and the NQ is we are holding that range very well. What I mean by that is we've run up and it's almost like it's in a bit of a flag pattern itself. When you get this sideways pattern, this is also referred to as a pennant pattern, where you're going sideways. So it's similar to a bull flag type pattern or a pattern in general, but keep that in mind. Okay, let's go ahead and take a look at the YM. Moving on to the Dow here. Very similar as well, holding near that 41,000 level, a big recovery to the upside, and then a sideways pattern, again, just very, very similar to the pennant pattern, RTY. Okay, the weakest of them all, we're very, very far away. In fact, we did not touch the resistance level, the prior level around 2000. As you can see, we got a little bit of the pennant pattern, but more weakness to the downside. In fact, this is a pretty significant pullback right down through here before we recovered up. So across the board, the RTY, you have to say, is the most negative of the three. The other three are very, very similar. Probably that is, with the NQ being the strongest, testing to the upside. A lot of times, if the markets can stabilize, you will see technology really kind of forging the way higher. I'm going to show you this too. This is the SPX long term. These are just good patterns to keep in mind, although we don't always check these, right? When we're going through and looking at them. Here is a weekly pattern of the NQ. Now, what I've lined up here for us along this lower point is, excuse me, on the SPX right here. This high point right here is a culmination of two key Fibonacci points. You get the 50% and the 61.8. I'm going to show you where those are coming in at, because I think you guys might look at these. This is just long term. I realize we're using, short-term futures mainly in this class, but these are interesting levels nonetheless. A quick note over here, I'm on my drawing tools, the far right-hand side. Just go to your percent here. That is your Fibonacci drawing tool. If you draw it off of these points over here, lows and highs, the bodies of the candles, that is, as we're looking at weekly bars, you can see that is very, very close to a perfect 50% pullback on the fib right here, the Fibonacci. The next level, which I would say would be really the last point, the last high, the last low before this major rally to the upside right here. Boom. That's your 61.8 right there. It's a little bit tricky to see. I'm going to zoom in so you can see it, but I just wanted you to know these bigger picture points are coming at prior lows, which is exactly where we bounced right here. And if you can get a confluence of Fibonacci levels at this point, can be interesting. Really quick side note on that. I've had that noted for that very reason, though, because I do find it quite interesting as we've gone into this. Let's go ahead and go back to our ES, looking at a shorter term chart. Folks, a quick overview of volume. Which direction could this potential triangle pattern, and you can see it now unfolding. We've just moved into a 30-minute chart. This is actually that pennant pattern that I was referring to. Let's draw some lines in here so we can just kind of make this out a little bit better. This is the sideways channel off the high. You see it right there. We're very close to touching off this point and off the low. Draws even better off the low, actually. Look at that. Right. We've actually touched off that lower level. If I'm drawing off of the body of the candle to the touch point, we're right there. Now, again, with this kind of a move, what we could be looking at, and we're going to factor this into our trades today, we'll take it down to a 5-minute chart here in just a second, but it is that move coming out of this base that we want to keep an eye on. Okay, where might this pattern go? This is that pennant type pattern, kind of like a flag. Well, the retracement of that oftentimes can be the length of the actual pull of the move initially. That was a big day. That was the big day where the Dow was up, at one point in time, the range of the Dow was 3,500 on the day. We're looking for the possibility of a follow through right here to the upside, to that level. Now, I've got to redraw this so you can see it, but I'm going to pull this down, my y-axis, just by holding the mouse button down, the left mouse button, and dragging this down. You can see where that projection might be. As a matter of fact, let's use some Fibonacci's to make this projection higher. Down here in the drawing tool to the right, these are our Fibonacci extensions. Very useful tool for price patterns, flag patterns in general. Let's click on the body of the candle, pull it up to this level. Now the breakout, we can look oftentimes for a breakout of the range. That can be an extension up. Some traders too will come down here and they'll just use the full bottom point of the possible flag pattern as the projection. So they'll say that there could be a 100% move right there. Some will use it, if they're using it like a pennant pattern, as a breakout range right here. We're getting very close to that breakout range right now today. I was hoping we would get it during our session, and we might. Up currently about 28 points. We'll keep close eyes on this for the possibility of a breakout of the pennant pattern here, okay? But as we look at this, one initial target could be about 5,800. Let's just draw a line through that. You see the 100 right there? Let's just draw a line to the left. Okay, so we know that there are some previous highs that come in right at that level. That is one target potential. A larger target potential, if I right-click on this, I can activate the drawing again and just pull it up to the possibility of that breakout. If in fact it does break above the pennant pattern. The pennant pattern, a full projection on the pennant pattern would be closer to that 6,100 level. So 5,800 and 6,100 right here, just above 6,100, right through this level. I'm going to back out of this and let's see how this lines up on a daily chart, as we're getting very close to this point right now in terms of the possibility of a breakout. Okay, so let's take this off. Actually, we'll keep this on. We'll keep it on. I'm going to back out to a daily, and I'll show you where those levels come in at, what some of those highs we were looking at just now were hitting. So in terms of the 5,800 level, that is actually the projection right here up to this high point here. Let's see. So yeah, right up here. 5,800 right near this prior high. So if we break out here, we could, if that is a flag pattern, come up to this level. And that would be really quite interesting, especially if we come up to this point and we come back down again. That would create, which I've seen so frequently in the market. Here's a case in point over here, actually. If we were to run up here and pull back down, this could be a change in trend, and it's also an inverted head and shoulders pattern, which you do tend to get on these market bottoms from time to time. Case in point right here. Here. We had a little bit of an intraday, sort of a flag that took us up here, but there you go again. We don't know if we'll get a formation like that. We'll see what does happen, but it could unfold. All right, so just some big picture items before we dive into this. It's good to have those in place because we can get sharp moves off those levels. Very, very sharp moves on an intraday chart. Let's put this back up again so we can see it. Oh, let's get back to our drawing tool right there. Okay, there we go. Off that point and that point, you can see how close we are getting here. I'm going to keep these lines on here because I do want to see how close the NQ is to this level as well. Been waiting quite some time for a little bit further away, it looks like. Let's draw it off of our tops here, taking this on down. Yeah, so a little bit further away off the bottoms. You can still see we've got a pretty good test off that bottom right there too. Remember, this again, that's that gigantic day that we had in the market where those reciprocal tariffs were paused and the market tended to really spike up, and we've just been really in a compression range ever since. All right. Could we get a big move here? Well, we do still have, jump back to one thing, on the VIX right now. The VIX is above it's above 25 to 30. We're dipping on the VIX right now, but this range right here is really, really quite volatile. If you get above 25, even to 50 or higher, and we are above 25. We're not above, 25 to 30 or higher. We are greater than 25. So greater than 25 right now. But this is a range where we do tend to get a lot of volatility spikes. You'll notice too, the VIX coming right back down to a prior high level, which sometimes I've noticed just historically, the VIX will respond to these support and resistance levels on the chart. As you can see, in fact, you can look back over here and find that, yeah, there are support levels where you will see a VIX come back down and spike from. It was a prior low right there. We got a spike. Will we, the question is will we bounce off of this level and go up? We don't know. Now, that would be a move to the downside. If we go up on the VIX, that would be a downside move, obviously, on the S&P 500 index, very likely. So that's the question, too. But it's a very interesting point that we're right back at. So one of the things that I will look at here is, do we end up taking out a prior high on that VIX? Do we start to break above this level? If so, that could trigger a downside move. Just something to be aware of here. Right now, we're still selling lower, selling lower. There could be more support below the 25 right through here. So thinking in terms of market direction, these could be interesting points to kind of keep an eye on. Okay, back on the ES now. Let's zoom back into our shorter term chart and look and see where we're at right now. We could still today, as we zoom into a 5-minute chart, we're still a little ways away. In fact, we're going to be very, very close to this level up top here. What I want to do right now is overlay some levels for you guys that can coincide with a bull flag pattern, because we still have time to look at this, and we'll see what else is developing even within the metals market here. But let's say, for example, we could still potentially, flag over here and break out. That's possible. There's a little bit of support right through here. We don't know what we're going to get between this range, and we don't know whether the levels exist in terms of the pivot points that are out there. Let's pull up the pivot point right now. So here is a futures overview, looking at our markets as they stand right now. This is our center pivot point. You can see that we did get some pretty big spikes. We actually got a spike off of the YM, which looks to be actually the strongest chart today. This is our center pivot point I'm referencing, strength or weakness. Although, we did break some recent highs. Let me highlight a couple of things. Notice we did dip below our center pivot here, and here, even on the RTY, but the YM held it. That shows us that there is some strength within the YM. Now, a quick point is we did take out the prior highs on every single one of our major market indices here. So they're all pretty much in line in terms of the possibility of taking any one of these on the bullish side. Every once in a while, you'll get one that shows weakness coming down. Okay, that's not as strong, but they're all pretty much in line today, all within that developing kind of a scenario that we're looking at. So this, I'm going to show you this. This is the pivot point. I'll list this over here for you so you can see these. The pivot point is, first of all, here's kind of a pivot point setup. The pivot points are made in basically they're set up in 3 key areas. You've got the main pivot point here. Let me show you where you can add those in if you're not using these. Again, these can be quite helpful though for support or resistance levels moves as well. So around price patterns. But you can add these in up top. It's just an indicator. So I'm going to go ahead and just point this out. Let's see, here are the pivot points. It's not the purse of pivot points. There are a few of these. I'm going to go ahead over to the far right and click on this right now and just highlight what it states here. So the pivot point is a study whose purpose is to provide 3 key support and resistance levels using daily, weekly, or monthly timeframes. So think about trading those price patterns within each of these as we talk about them. You've got the first pivot point, the second and the third is what is listed right there. There is also a main pivot point, folks. These are built off of the prior day's range is what they are. Okay, it does give you an explanation. The first pivot point is above the pivot point, is resistance level, or below the pivot point. They are built, though, based on, like I said, the prior day range here, and everything is based upon the center pivot point. Okay, and this is what we're doing right now. This is what it's looking like on this setup. Now, this is how the pivot points are traded, as you can see the setup. So a lot of times what you might get is the possibility of, let's say, a potential bull flag pattern. Anytime you bounce off that center pivot point, if the trend is up, if you're getting, let's say, for example, a bull flag, that could be construed as a positive move. So you're looking to take an upside move. Sometimes you'll just retrace just below that line and go higher. But the key point is the direction of the trend and what price pattern is forming around that pivot point. How they are oftentimes traded is right here. The price move to the upside, say, for example, if we were to get a move up here and a possible pullback, this whole move is a bullish type move right here. So a bounce off this center pivot up to the R1 level, that is a target range. These are frequently used on a 5-minute chart, okay, to see those levels. Now, notice where that R1 level comes in at. Folks, it's right there. It's like right in line, really, with what we're looking at. But that's not, I mean, and that's why a lot of times traders will use these levels. Let's see. All right. So that is one scenario, one setup. Notice that's coming right at the top of that triangle. And that was the key point that I wanted to talk about today, that triangle move. This move here, this R1 to an R2, it's not the full flag pattern move. It's just this move above here. So if we were to get a break above R1 today, say, for example, or above that trend line, these are very closely correlated. This, we would basically do this. We would say, if we get above the R1 level, redraw that in again, R1, we would take a trade up to R2. Okay. There is a third pivot point that's way, way high up. It's not oftentimes used, but it could be very interesting to see where that comes in. Notice that this gives us a range which is a little bit tighter than, I mean, in terms of a target, than what we would be seeing with that flag pattern. That flag pattern was substantially higher. That flag pattern was like a few hundred points higher, like 5,800 for the original flag pattern coming off of this long range. This gives us another level to keep in mind that's a little bit closer than something in terms of a longer term flag pattern that you'd even see on a 30-minute chart, right? So this takes us to a 5-minute range. Now, what some traders will do too is they'll take the midpoint range and take a trade there as well, between the R1 and the R2. And that's where sometimes they'll even take some profits, or if they had 2 contracts on, they might decide to take one of those off and then take the next one off up here, is oftentimes what they can do. Okay. And so we're very, it'll be very interesting to see what we get in terms of this setup. We might still have some time here. It might develop today, though. I did want to take a look at some of the metals and see how they're developing. Before I do that, the pivot points over here, let's take this off for just a moment. I'm just going to run through the NQ so you can see where those levels would be. Very, very close. I mean, that basically lines up through definitely a portion of the day over the next couple of hours with our trend line coming down and our R1 level to the upside. The YM, still a little bit of ways away. It's above that level, and you can see this break right here. Now, this center pivot point, again, folks, notice how we do get a bounce off the center pivot point. This is a very interesting level to watch, particularly pre-market on any of these major market indices. Basically, for this pivot, and you're getting a calculation off of every one of these. So the pivot point is basically just the high plus the low plus the close divided by 3 of the prior day. So it's just taking the high, low, and close of this day's activity and adding those and dividing it by 3, and it gives us those pivot points right there. Okay. And so that's how those are formed. And basically you're just adding, there's another little formula where you get the R1, R2, and the S1, S2. These are for the downside moves over here on this end, okay? But that's what we're getting in terms of the pivot points right now. Here's the RTY. Oh, so breaking above it right now in the RTY. Interesting. There could be actually a trade that we could put in, just like an example trade here on the RTY. Hoping to see one on the ES. We could look at maybe using the micro ES on that as well as an example. But moving up here, okay, so a break above this level, technically somebody could have taken a trade right there and taken it to the upside. Now, it did fail, But what they might do now, because it did fail, is they might wait for a close above this R1 level before a trade is put on. This is going to be an interesting one to keep an eye on. Let's do that. Let's give it a little bit of time, but let's keep tabs on it for sure. Now, let's look at the metals market as well, because I wanted to know, I mean, oftentimes you can extend this out. Here are the futures metals overview that I will put on. Let's go full screen on this and see what gold has been doing. A lot of times too, if we get a counter move on gold, if gold is breaking lower, which it is, gold can be an indication of uncertainty in the market. There is uncertainty with tariffs, and we've seen gold certainly show some strength. Gold dropping lower. This is a really easy and a quick way to look on a 5-minute chart and just say, are prices dipping? Are they going below? Using gold as just as a key guide. What are we seeing around the center pivot point to start the day? Because a lot of times if you go below this level, you might remain below this level, and the market, the S&P, might remain above it. This has just been kind of a recent trend, but it's in this position that we're in terms with tariffs. And I just, this is one thing I've been looking at. We did break below, and you can see that it was an established support level, albeit, on a short-term basis, but it goes back pretty far here. Silver been showing a little bit more strength. You can see palladium actually the strongest of the four metals that we're looking at here. Copper actually leading the way earlier to the downside here in terms of weakness. So a quick note here just on GC, on gold itself, looking at gold. The one thing I'll say about gold, daily chart, keep this in mind. Gold does look actually quite strong. Now, could it pull back for a couple more days? Sure. But this is a very, very strong move to the upside. You can see the consolidation happening. We've been holding our gains on gold very, very nicely. If I take it just to a 30-day, 30-minute chart, there it is. It's basically, it looks a lot like a flag pattern. Of course, the flag pattern could pull back down further. A pullback like this, we could see a spike on the ES higher. See, we're just sort of rolling over here. Boom, right through there, there could be some support on gold. Keep an eye on gold here because it has been kind of moving inversely to the ES on a large degree in terms of some of the bounces it's been taking, even on a short-term basis. All right. Let's see, what do we have? Any questions coming through in the chat? I'm throwing a lot of information out here to try to get this in before we possibly might bounce on one of our markets through this level. Let's see. What have we got? Oh, yeah. So, yeah, the VIX a little bit. It is showing a little bit of weakness. Yes, coming back down through. Let's pull it up right now. So the VIX, exactly. And so VIX is still selling off. This is an interesting indication, too. Is it showing weakness, too? Remember the inverse correlation with the market here, too. We might see market strength coming to the upside as we're getting that. Yeah, and that is a good key gauge to take a look at. That and gold can be very, very helpful. So GC here, as we're starting to see it pull back a little bit here, breaking. What we did see was an intraday pivot point line coming lower, could give us strength to the upside in terms of the ES. Okay, the pivot point, so WS was mentioning what are the differences there, pivot point versus ATR. So ATR really, ATR is looking at your average true range, which is different. The ATR you'll find up top here, ATR. Just a quick note on this. Yeah, the Wilder's ATR. So that's looking, so the ATR, I'll pull it back to a daily chart. And actually, let's just add it in again here on the daily ATR. So the average true range is looking at the true range of the day. For example, you've got a 3-soldier candle pattern up, 1, 2, 3, and then a pause. It's looking at the range of the day, as you can see over here in R. You can point to a particular day and you get the range. That's referred to as the true range. Now, the average true range is taking a look at the last 14 bars. And it's taking a look at the highs and the lows, and that's our reference point over here to this line. Okay, so that's what it's kind of a volatility adjusted level based upon what the bars are doing themselves in terms of the highs and lows of those bars themselves. And so that's what that focuses on with the ATR. The pivot point is the high, low, and close divided by 3 from the prior day. So it's completely different, but it's short term. You could still use, of course, ATRs on a short term basis. All right, well, let's do this. Let's get back to our ES, and I'm going to move in to our pivot points over here and just see how we're doing. We have a ref that's pulling back a little bit here off of that level, so still kind of tightening, but let's go ahead and add those in. And I'm not going to jump off this chart because I wanted to show you here. I was really hoping we could get a bounce above here. Pivot points, that's on a 30-minute chart. You can't see them as well, right? The 5-day, 5-minute is better. I've added them on both. There are the pivots. It's the second one down. Just double click. There we go. We got it in place. Okay, now I'm going to zoom in on it so you can see it. And there we go. So we might, like I said, we might be flagging here. And, you know, there's the possibility of us still taking a possible flag pattern to the upside if we do break. I have pivots set up over here. Let me go ahead and just share this so you have it. And this takes us to a 1-day, 5-minute. I'm going to share this screen in the chat just so you have it. Oh, let's throw it in. There you go. Right there. Okay. So you can find this now in your charts. I've got that'll be saved as a chart over here, and you should be able to set it up. Actually, let me just share the grid just to make sure it comes through. There's a pivot point grid, and now you'll have it as a grid as well. So there you go. Okay, so here is your grid is in place for those pivot points. And you can put in anything in there, whatever the case might be, we could be looking at it and see what we've got in here. So I did want to get a trade in though. If we can get, actually, if we just get one more bar forming here, I want a 5-minute chart. If we can break above a high, we could just put one in as an example. It's kind of actually even a more moderate, something that Ben would use is one of these sort of flag patterns over here coming in and without the pivot points, and then the possibility of a break to the upside. You'll notice that the trend on this 5-day, 5-minute chart is higher here. So we are breaking up with some of the things weakening behind the scenes. The gold is showing some weakness today, as well as the VIX. So we'll be watching that. Now, as we take a look at this setup here, I do actually have in here the VWAP line as well. Now, the VWAP line is a line that's oftentimes combined with these short-term trades. The VWAP line is the volume weighted average price. So it looks at volume relative to price. There's an explanation on it up top, but basically what traders will do is they'll say, if you break above the level, you're showing, that's the only time that they would take a bullish trade. If you're trading below the level, it's the only time you take a bearish trade. What is interesting is if you do get these correlations like we're seeing here on the chart, right through here, these sideways correlation to the center pivot point, it gives a pretty good reference. If you break lower, you can take trades to the downside. If you break above it, trades to the upside. This is I use it sort of like a moving average actually, but it's actually just a volume indication relative to price. The explanation is up above. Here is the VWAP line right here. Just add VWAP in, and I don't change anything on it in terms of the defaults. It's just added in, and you can get an explanation up top here. I've not used the anchored VWAP. That'll be interesting to kind of take a look at. Now, okay, that's not going to load. That's okay, but that's where you'd find it at. Just to let you know, when I sent this grid through for you that I shared, the VWAP line is coming in, is part of the grid. Okay, so we're looking at potentially 2 possible setups here for a trade in the last little bit. The trade would be a pullback and maybe a break higher. But if we just break higher from here, we're just so close to this level we might just want to wait for a breakout above this point. Now, what we're talking about when we're looking specifically at the pivot points, okay, that we're getting a line on, this is our diagonal sloping trend line coming down, right? Our gold line here, and that line is off of the longer term move, right? And we've seen this consolidate. So we're getting a line coming through here. That is our gold line. This is on a longer term chart. And then this is our R1 level. So a 2-tick move plus 2 ticks above the R1 is considered the possibility of an entry point right there. Okay, so we could take an entry up 2 ticks above that level. All right, and then we would take an exit. So if we did a +1 here, 2 ticks above, we would do a -1 there. That's our target, a much shorter target than the longer term flag, for sure. Okay. All right, now in terms of the possibility of an exit getting out of this trade, if it goes against us, we could still use an ATR in here for that. We have traditionally done that in this class. Let's go ahead and throw an ATR on. Oop, let's wanted to add it in. There we go. So we've got an ATR now. And so the ATR would be in place. And a lot of times what we're doing is if we were to get in over here and it goes against us, right? Depending upon the ATR you want to use, here's the ATR. It says that average true range is about, well, it's about 9.5. It's really quite large. So when they get this big, sometimes traders will use a 1 ATR, or they might cut that. They'll divide it in 2 and just use a 0.5 ATR for that level. So would that be about, 475 or somewhere in that range, or very close to 4.5, you could say, a little over 4.5. In terms 4.5 points, in terms of a potential stop or exit level to the downside as well. All right, but we're setting up for actually, yeah, so an interesting move once we can get this to unfold here. If I go in and just flip this quickly, let's just go to a, let's go to a 30-minute chart. Let me go back here for just a second so we can see it a little bit better. But again, on that ES, the 55 only takes us to this point here. So like just above 5,500. So our target is right about here. It's not too much higher on that breakout, which is completely different from, let's say, the flag pattern out of this pennant here that we'd looked at. I think on the bare minimum, let's click again. I'll show you how to use these fibs. So what you're going to do is just use the fib. You're just going to click one time, click again, and click again off the bottom here. 5,800 is the target on the longer term flag. The shorter term pivot point is like right in this range. It's very, very tight. So it might be taking us, much more closely connected to a 61.8% move as opposed to a 100% move. Oftentimes these 61.8% moves do correlate over here. That was basically a gap down. That was prior support here as well. Notice what those pivot points can do. They can help us sort of anchor other support levels, other resistance levels, in this case, other targets with the Fibonacci. And that's kind of something that's, it's really quite interesting to do. As I'll go into a 5-day chart now, back to our pivot points, and I'm just going to go ahead and throw a pivot point on here with these lines so you can see them. Okay, so I don't want to make this confusing. I just want to let you know you guys can use these in the same fashion that Ben has been using them on these bull flag type patterns. Okay, let's go into a 1-day here, 1-day 5-minute, so we can get back to what we were looking at, and then we'll have everything in place. Okay, so there is the 50% Fibonacci retracement. Where was the 61.8? Folks, it was right there, just above our R2 level. Very, very close. So there's likely a move up here, but just keep in mind that's a very, very small move relative to what it could have been on the daily chart. The daily chart puts us much, much higher, but if you can line these up, it will give you additional points to use for the flag pattern setting, the setups, or inverted head shoulders patterns that we've seen here. We're seeing a constricted range here for really the longest period of, I mean, we've had a lot of volatility. We've been moving and had some really interesting moves as of late from these pivot points. But we're, like I said, we're in the very sort of end, the apex of this triangle. Do you see it? I'm drawing it between these two lines right here. We're in the very apex of that triangle. And so what does that mean? It could mean a tighter and tighter and tighter price range. Yep. Okay. So a couple of interesting points to look at. Do we have some additional levels to potentially use? We've got three that are lining up so well, which is, it's remarkable, actually. You got a 50%. You've got a trend line right here. That's the trend line. And then there, right up on top, that is your R2 level. Excuse me, R1. My apologies. R1 level. R1. R2 is up top. That's your target, is R2. So again, how this could work, we can get above that 50, the trend line. We wait one more to the R1 level, take a trade here, one, and then -1 up top. That is your move to the upside, folks, right there. Okay. So with that, let's do this. I want to show you too. I think we've used this in the past. Let's go to MES. This is going to be quite a little bit, it's going to be quite a bit different if we take a look over here into futures, our futures tab. What I wanted to do was show you sort of the tick size and the tick move. So the tick size move is a quarter. That's a tenth of the regular ES contract. Okay, so MES right here. So every quarter point move, you could say, or 25-cent move, it moves $1.25. Folks, this gives a lot of flexibility here for using money management in terms of contracts. Contracts over here. We could use, let's say, for example, 3 contracts. It's really, close, basically a third of the ES is what you'd be looking at here. If we just go to the ES itself, this is kind of the scenario here. Well, let's pull it over here. Yeah. So you notice it's $12.50, and that's a move to the upside or to the downside. And that's true with MES as well. So this is going up or down, not just to the upside. You got to factor in both. That's your tick size, up or down, right there as we're getting into this level. Okay, and once you know it's coming right at the our cutoff point where we get it, but I'm going to show you how we would set this up. Anyways, oftentimes we could use this active trader tool over here. Let's pull this over to the right. I'm actually going to use the MES, so we'll use the micro ES, MES over here. Let's pull it up. Boom. All right. So what we could do over here when we set this up, I'm going to drop this guy down. And we're going to go into a template, which is a one cancels the other order. On this, I'm going to set this up actually as, I'm sorry, a bracket order. So let's just do a single bracket order as it sets up. So it was bracket order that I've got in place. Okay, so this is a bracket order. And what this would look like, we could put the trade on here, but we have a target above and a target below. You can see if we were taking the big move here, if we're looking for a big breakout, again, there could be some targets that could be made at the 50% level between the R1 and the R2. If we get 2 ticks above here and we take our trade, which also corresponds very nicely with taking out some highs, totally independent of those highs, the calculation that is, though. What we would do next is we would set our target, which is our limit up top. Okay. We could set this up in place, and I'm just going to do something like this. I'll show you how this would work. I would say something like, say, for example, 30, and I could tab through, all right, and I could put down below here, even what was our stop level, our potential exit level using an ATR. was about, 4.5 if we were using half an ATR, right in that range roughly. 4.5, 4.75. That is the general setup. And once we have this in place, we can simply, do we have a good tail cancel order? Very likely we would in terms of a target, but we're really looking to just trade this today, right? Just a move today. We would just simply click on the buy market here, and we could adjust our orders on the chart as well once we put that in. Okay. Now, we don't necessarily need to have, pull this over here. Yeah, we got our bracket order here. Let's go over here real quick. I'm going to show you guys. This is a quick entry, to put that trade in terms of a market order up top, if we chose to do so. If it's breaking right above that level, we're watching it. We can see the price coming up. That is one way to do this, okay? So keep that in mind, folks. We're right on the verge of actually taking this one way or the other. In fact, there's almost like a small bull flag kind of forming right here as well. Hopefully today, the whole idea was to give you guys some ideas on where these support and resistance levels really kind of correlate. I mean, try to find where they might anchor using pivot points, using Fibonacci levels, and just trend lines too on a shorter term basis as well. Because a lot of times they will give you very clear areas where that resistance might be, and that can line up nicely with a pivot point target range or a target that could come off of a flag pattern. So if you did put, let's say, a paper trade on later today, you have some really good ideas of where maybe, hopefully now, some of those support and resistance levels might reside. That was what I wanted to do today, hopefully to get that trade in. I was hoping we would get that breakout. We got very, very close to it, but not quite there. Again, we're in that constricted range. Folks, if you like today's presentation, smash that like button. It has been good to be with you. Definitely follow us, subscribe. Real easy to do, bottom right-hand corner of the screen. With that, thank you so much, Connie, for your help. Everybody, have a great rest of the day. We're out of time, but you know what to keep an eye on. See you next time, all.